fact that the focus now will be on the earnings season. So Nimesh has done a very interesting ahead of the curve analysis on what are the sectors where you should expect blockbuster earnings and which are the sectors where you could expect some tepid earnings. Nimesh, why don't you take us through the list?
So, Anuj, as you rightly pointed out, at record high levels, earnings season is coming in. It's going to be a very interesting quarter across many sectors and many companies as well. On the aggregate, just put to aggregate numbers first. For Sensex, the Nifty growth estimate is around 18% YOY, but an 8% decline on a quarter-on-quarter basis. Similarly, for Nifty, it's going to be 25% net profit growth YOY, but again, an 8% decline there as well. In terms of sectors which can actually drive the earnings for this quarter, it's going to be banks and autos on the upside, and which can drag the earnings could be metals and cements. That's an overall picture. Now, coming to the individual sectors, that's going to be very interesting. Personally, I'll be watching out for OMCs very, very closely. The expectation is this is going to be a blockbuster quarter for most of the OMCs, largely on back of the elevated marketing margins. Remember, crude is still, they're still selling in retail levels at 105 rupees. So that's going to be a big earnings quarter to watch out for. The second big sector to watch will be the banks. Within the banks, the consensus is that you'll see probably a NIM compression of 10 to 20 basis points, to some extent 30 basis points as well. So that's something for the banking sector. For autos, it's going to be a very strong quarter is what the street is expecting, and there's going to be a margin expansion as well for most of the companies. So autos could do well this quarter. For cement, the volume share is going to be quite strong, but again, the margins could be quite flat for most of the cement companies in this quarter. So that's something as far as cement is concerned. For consumer durables, the feedback is going to be a very weak quarter across the board for most of the companies. One exception there could be Trent. They can see a bit of a surprise there, so that's something to watch out for. For NBFCs, is similar to what I spoke about banks. The compression in names is going to be a very important thing to track for most of the NBFCs as well. Gas utilities could again be a very interesting sector to track. Like I said about for OMCs, even for gas utilities, this could be a big quarter in terms of margin surprises for most of the companies. So that's something to track. For metals and within metals, especially for steel, the consensus is that maybe one need to estimate at least 2,000 rupees per ton of decline on a quarter-on-quarter basis in terms of margins in quarter one. Specialty chemicals, that is one sector to watch out for. Across the board, the feedback is going to be a very, very weak quarter. So again, a lot of the companies are at record multiples. So that's something to track as far as specialty chemical is concerned. And last but not the least is IT. Rima has extensively covered it. But in one line, it's a seasonally strong quarter for most of the IT names, but it's going to be quite different this time. So you probably see some bit of shakeouts in the large cap IT names as well when the numbers are reported. So it's going to be mixed, but as I said, Anuj, the big sectors to watch will be OMCs, gas utilities, and to some extent autos as well.
Okay, that's the big picture. We'll slip into a very short break. On the other side, we'll dive deeper into the IT sector, which starts reporting numbers next week. And we'll also discuss markets with Andrew Holland of Avendus Capital. Stay tuned.